traders, Raghee here, and in this update we're going to follow up on that silver discussion that we've been having. So if you haven't been keeping up with these free videos, please check out the previous video, the one from yesterday, February 2, and you'll see that we were talking about a very specific pattern after silver had this sell-off right in here. We were looking for a very specific pattern to follow up with. Now, that very specific pattern was going to be one of two setups, what we call a minor low, where we would put in a lower low than the second, but we would also still have a very narrow candle, very narrow from high to low range. The other scenario, which is what we're getting, is an inside day. And that inside day simply means, again, narrow candle, but no new lower low. In other words, inside day simply means that we are trading inside the range of the previous session, which is what we have today. What that does is it shows a pause. And at pause, right, that's the most important thing, that we're not seeing lower lows. The pause then is actionable because of that narrow range. We're not seeing silver skyrocket higher. We're seeing it still sitting at the lower end of the range. And so if we have a large candle like this, you might ask, Rog, what's the lower end of the range? I'd really like to see it stay below half, but if it can stay down in the lower 25% of the range, even better. So we get a pause, narrow, and it's at the lower end of that giant range which set up this inside day. That's a really nice opportunity to scoop up some SLV calls. Now, this is not a trend follow, gang. Most of what I like to do in the markets is trend following. And so this is really more about a market that's really in the public eye. It's being talked about a lot. There might be some folks thinking that they could take advantage of that move lower. But here's the thing. This is still an aggro level. And if I'm going to look for another opportunity, let's say we break the low of the second, and we head down to this area here, or even testing this area down in here, that's going to be where your conservative level is going to be, which I would prefer to be down there, or it's really one setup here, a second setup there. So you don't load up at this aggro level. You simply enter, you put some skin in the game. Maybe it's 1/4 of your overall budget for this trade. Maybe it's 1/3 of your overall budget for this trade. But what we're going to do in the second part of this is take a look at the SLV. So that's really where the rubber meets the road. It's the SLV call that I'm going to enter with. If you're comfortable with silver futures and you're okay with the overnight margin and you're okay with the risk per point, terrific. But I think most folks are going to be covered very nicely with a long call in silver. All right, so there's a follow-up on that pattern that I mentioned. Now, again, notice that I looked at the SI, the March contract of silver, to set up SLV, and that's how I play the futures to the ETF alternative. I would do the same thing with gold. I would do the same thing with crude oil. If there is an underlying futures contract that there's an ETF for, maybe it's corn and the ZC futures, I'm still going to use the futures contract to set up that option on the ETF. All right, gang. See you in the next update.